If you're a foreign bank operating in the UK, vendor management isn't just a compliance checkbox. It's a strategic imperative that can make or break your regulatory standing. The Association of Foreign Banks recently published a comprehensive guide highlighting how a single misstep can mean regulatory penalties, financial losses, or reputational damage. Today, I'm going to break down exactly what UK regulators actually require, the real challenges you'll face, and practical solutions that work. I'm Bradley Geldenhuys, founder of Vendifi, a turnkey vendor management platform, and this is your complete guide to UK vendor management requirements. Let's start with what UK regulators actually expect from foreign banks. There are three main regulatory pillars you need to understand. First, the PRA Supervisory Statement SS2-21. This requires you to identify and categorize all third-party vendors based on criticality. You need to distinguish between material suppliers and standard vendors. Apply an enhanced due diligence to critical relationships and maintain clear documentation of every categorization decision. Second, the FCA's Operational Resilience Rules. These focus on assessing your vendor impact on critical business services, documenting how vendors' failures could affect your operations, establishing clear governance frameworks, and regularly reviewing vendor categorizations as your business evolves. Third, GDPR obligations for cross-border operations. This includes data processing impact assessments for vendors handling personal data, documentation of cross-border data transfer mechanisms, evidence of vendor data protection compliance, and regular audits of vendor data handling practices. The key here is to understand that these aren't separate requirements. They overlap and interact in complex ways that create a comprehensive vendor oversight obligation. Now, here's where the theory meets reality. Let me walk you through the actual challenges you'll face implementing these requirements. Challenge number one, defining what critical actually means. Most banks will struggle with a consistent vendor management categorization. Is it revenue impact, operational dependency, regulatory exposure? Without clear criteria, your IT department might classify a vendor as low risk, while your compliance team considers them critical. Challenge 2, questionnaire fatigue. Your vendors are getting hit with security questionnaires from multiple clients, often asking the same questions in different formats. Industry data shows vendors spend over 20 hours completing each questionnaire, leading to delayed responses, incomplete submissions, and frankly, vendor frustration that can damage your commercial relationship and delay business. Challenge 3, the resource drain of continuous monitoring. Manual monitoring of vendor compliance is extremely resource intensive. Large banks need 15 to 20 full-time staff just for ongoing monitoring activities. And even then, most organizations only discover vendor security issues after a breach occurs. Challenge 4, cross-border complexity. International vendors often struggle to understand UK regulatory requirements, leading to compliance gaps. The FDIC has documented numerous examples of third-party compliance failures, and industry analysis shows that cross-border compliance challenges arise when companies operate in different jurisdictions and must comply with different regulatory frameworks, laws, and cultural norms. This is a widespread challenge we see across the industry. Vendors operating in multiple jurisdictions struggle to keep up with different regulatory expectations in each market they serve. And here's the kicker. All of this information is typically scattered across different systems within your organization, making comprehensive oversight nearly impossible. So, what can we actually do about these challenges? Let me give you some practical solutions that work in the real world. For vendor categorization, don't use arbitrary thresholds. Instead, tie categorization directly to your business processes. Vendors supporting these processes that generate more than a substantial amount of your annual revenue are automatically critical. Think core banking systems, payment processing, primary customer channels. Any vendor handling regulated business process is automatically critical regardless of revenue impact. That's your AML monitoring, regulatory reporting, customer data processing, and compliance management systems. If you have material suppliers, these support revenue generating processes or handle sensitive but non-regulated processes. Your standard vendors support less than 5% revenue impact and handle non-regulated, non-sensitive processes with readily available alternatives. For due diligence documentation, here's where it gets sophisticated. Instead of sending the same 200 questionnaire survey to everyone, create a risk-based questionnaire generation. Your critical vendors get comprehensive modules. PRA Operational Resilience Module for vendors supporting critical business services, FCA Consumer Compliance Module for customer-facing processes, a GDPR module for data processes, and a Financial Crime Prevention module for transaction processing vendors. Your material suppliers get streamlined questionnaires, specific questions covering operational security, a module on regulatory awareness, and on business continuity. Standard vendors get basic modules, a specific set of security questions, and compliance confirmations. The magic happens with dynamic question logic based on your business process mapping, not vendor self-reporting. When you link a vendor to a business process that requires PCI DSS compliance, like payment processing or card data handling, the system automatically includes PCI DSS questions in the questionnaire. If you've categorized a vendor as supporting cross-border data transfers, they automatically get an additional module covering jurisdiction-specific compliance and data transfer mechanisms. This is also the time to request specific documentation and evidence, such as internal policies, certificates, and reports to each module to show evidence of the answers. So, for example, if you link a vendor to cloud infrastructure business processes, they get an infrastructure security questionnaire and are asked for their internal security policy documents and their SOC report. If you categorize them as supporting regulated financial services, they get additional regulatory modules and their ISO 27001 certificate request. This approach puts you in control of what questions are asked and what documentation is required, rather than relying on vendors to accurately report what they do. You decide the business process they support, the system determines which regulatory requirements apply to those processes, and the questionnaire is automatically generated with only the relevant questions and document requirements. No more 600 question surveys where half the questions don't apply. No more relying on vendors to understand which regulations affect them. You control the categorization, the system handles the compliance mapping, and the vendors get questionnaires that are perfectly tailored to their actual role in your organization. For ongoing monitoring, implement risk-based approaches tied to business criticality. Your revenue critical and regulated process vendors get monthly reviews, material suppliers get quarterly assessments, standard vendors get annual check-ins, and deploy automated monitoring for security certifications, compliance status changes, and regulatory developments that affect your specific vendor portfolio. Here's where the technology becomes your competitive advantage. The Association of Foreign Banks specifically notes that AI is revolutionizing vendor selection by streamlining due diligence, risk assessments, and compliance verification processes. Modern vendor management platforms can automatically categorize vendors based on business process criticality, generate intelligent questionnaires tailored to regulatory requirements, provide real-time vendor monitoring and alerting, and create a comprehensive audit trail that regulators actually want to see. The most advanced solutions now include AI-powered questionnaire completion. Instead of your vendors spending weeks filling out forms, AI can read their existing documentation and populate questionnaires automatically while attaching the documents as evidence. What used to take weeks now takes minutes, while maintaining the regulatory rigor you need. This isn't just about efficiency. It's about transforming vendor relationships from adversarial compliance exercises into collaborative partnerships that actually strengthen your risk posture. These challenges are complex, but they're not insurmountable. The key is understanding that vendor management for UK foreign banks requires a systematic approach that addresses regulatory requirements, operational realities, and technological capabilities. Now from a word from our sponsor, me. At Vendifi, we've built our platform specifically to address every requirement and challenge I've outlined today. From automated vendor categorization and AI-powered questionnaire completion through our Vendi-Auto solution, complete document management to real-time monitoring and comprehensive audit trails, we provide the complete turnkey solution and managed service for UK regulatory compliance. If you want to see how we can transform your vendor management program from a compliance burden into a strategic advantage, visit Vendifi.io to book a demo tailored specifically to your requirements. Because getting vendor management right isn't about avoiding penalties. It's about building competitive advantage through superior risk management. Until next time, I'm Bradley Geldenhuys, reminding you that great vendor management starts with understanding what's actually required.